What's up, everyone? It's Caddy with Money Vesting, and there is going to be another really important week set up here for the markets. We've got retail sales, consumer sentiment, not to mention the earnings season is now in full swing. We've got Tesla, we've got Nvidia, we've got Netflix, we've got all the big tech, of course. All S&P 500 companies are pretty much going to be reporting in the next 2 to 3 weeks here. So we got to strap up, we got to get ready. It's going to get volatile. Last week, we did have earnings from banks, which actually came in a lot better. So in this video, I'm going to break down exactly what we are looking forward to for the upcoming week, and of course, break down in individual videos the earnings review and the intrinsic value, of course, and the fundamental and technical analysis for these companies. So hope you guys enjoy this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below if you're interested in joining us. Of course, getting access to all the buy and sell alerts, options alerts, trade ideas, everything's going to be included. And I also want to mention that I posted a brand new video on the Money Vesting Reads channel today. So this is a book that I highly recommend, and it has nothing to do with the markets, because that's the whole idea for this Money Vesting Reads channel, is for us to read books. Doesn't matter if it's in the finance or investing or in the market space. It could be philosophy, it could be psychology, it could be a lot of different things. But the main goal is to draw lessons, life lessons, investing lessons that we can then use in our own lives, right? So that's the whole idea, is that every book, there's got to be a lesson to be learned. And this video, I spent close to 60 to 80 hours going over this, from reading, taking notes diligently, from scripting, recording, and then doing all the editing. So please go ahead and check that out if you have time. This book will definitely, in my opinion, will change your life forever. This is not an overstatement here, because of all the lessons that I go over in that book, in that video that I break down. So when it comes to the economic calendar, we do have retail sales coming out on Tuesday, which again are going to give us a little bit of an idea of how strong the consumer sentiment and the consumer spending really is. Retail spending, of course, is going to tell us that a little bit. And then we got the MBA mortgage applications, which come out every week. We got jobless claims, of course, some other leading indicators, and existing home sales also comes out on Thursday, July 20th. But the real fun begins for the earnings. So earnings season's now in full swing, as I mentioned. Bank of America, so some more banks are going to be reporting. And then we've also got, of course, Tesla, Netflix, which I'll talk about in just a minute. But Bank of America, Charles Schwab, Morgan Stanley, Lockheed Martin. We got PNC, we got BNY Mellon, we got Synchrony. All these companies are going to be reporting. And of course, we got Interactive Brokers. And then on Wednesday, we got Goldman Sachs. And one of my favorite companies, ASML, company that I've been meaning to buy for a very long time. We got Halliburton, Bancorp, US Bancorp, Ally, National here, NASDAQ is reporting, and M&T Bank, Citizens Bank. So a lot of banks, some semiconductors, and then the big company we've got on Wednesday after the bell. Of course, we got Tesla. The main focus for Tesla is obviously going to be on the margins, because they just had a record delivery quarter. But the next question is going to be the margins, right? Can the margins be up there for Tesla? Can they continue to keep profitability growing? And of course, can they keep the margins higher? Netflix is reporting, so we're going to get a little bit of an insight on their ad supported tier and how many people are actually subscribing to their advertised tier plan. We got United Health, IBM, Alcoa, Discover, and then of course Thursday we've got TSMC, so some more semiconductors and chip stocks, American Airlines, Johnson & Johnson, Nokia. We got Abbott here, and that's about it. KeyBank, and then Intuitive Surgical, so ISRG, Capital One, then pretty much it. And then finally, we got American Express on Friday before the bell. And that's going to wrap up the earnings week for the companies that I'm particularly interested in. Of course, it's going to be Tesla, Netflix. So Tesla, my biggest position. Obviously, I'm going to be focusing on that. And then, of course, we got some airlines, some semiconductors, some banks, some chips, and some fintech as well. So it's going to be a busy week when it comes to earnings. Going over to the S&P 500 here, we did see, again, a little bit of a pullback intraday. There was a bit of a reversal. We were trading as high as 4,500, 4,527, traded back down to low 4,500s. Support level is going to stay put down to as low as 4,450. And the next resistance and target is going to be 4,623. For the NASDAQ, again, it's going to be the same thing. We did see a bit of a reversal intraday, so we started to sell right back down. Support level is going to stay put at 13,800 with the resistance all the way up to 14,600. So those right there are going to be some levels to watch for the NASDAQ. Now, of course, I also want to mention that, markets earnings, if they continue to be very resilient, if we start to see, okay, earnings are coming in super strong. By the way, Pepsi reported some very strong numbers last week, and there was one more company that reported some very good numbers. I think it was Delta Airlines. I could be wrong, but I think Delta also, so Delta also reported a beat on both EPS and revenue. And Pepsi also reported a beat both on EPS and revenue. And banks also reported some very strong numbers. So chances are the earnings recession, or obviously we saw a couple consecutive quarters of earnings declining year over year, which technically, yes, puts us into an earnings recession. But nonetheless, we're coming off of some very, very low bases. So year over year, we could start to see some very nice normalization and some growth for these companies' earnings, which could, again, de-risk the market a little bit and start to catapult this as a catalyst to push us higher a little bit further. And it's even possible, of course, that we see the markets back at all-time highs fairly soon. So that's going to be the breakdown. We got lots of earnings. Again, if earnings come in strong on an aggregate basis, I think that only solidifies our, soft landing scenario, because jobs growth, tight labor market, we've got low unemployment, we've got inflation coming down, so disinflation's actually happening. Some categories are in full-blown deflation, and of course, more importantly, if earnings are strong, that means the consumer continues to spend, regardless whether it's credit or not. We're still seeing a lot of spending, and earnings again are going to be really dictating how the rest 2 to 3 weeks pretty much end up looking like. Last thing I want to go over is going to be the yields. So the 10-year yields have definitely been moving higher a little bit. So 1.7% green on Friday, back over to 3.8%. There's obviously been a lot of volatility with the 10-year treasuries, with the entire treasury market in general. And we have seen a bit of a rally here from 3.3 to as much as over 4%, so a 22% rally. And that inverse correlation between the yields and the NASDAQ has not been playing out. So they're both actually moving up in the same direction, because you can see that since May, the 10-year treasury has moved up 25%, and the NASDAQ has also moved up quite a lot. If you notice, since May, we have pretty much gone up. So since the beginning of May here, we have gone up a little bit over 20%. So they've both moved in the same direction, which you don't always see it happen, right? So one of those two things will eventually break apart. Either the NASDAQ starts coming down, yields keep pushing higher because of that supply-demand imbalance, or the NASDAQ keeps pushing higher on these stronger earnings. And of course, yields start to roll back over as prices come back up for the bond market. Again, there's a bit of an imbalance right now between the supply and demand, which is why the prices are lower. Yields are popping at the moment. So those are some things to keep in mind. Again, next target is going to be 14,600 on the NASDAQ. Support level is going to stay put at 13,800 down to those moving averages for the NASDAQ as well. So, hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to check out the Money Vesting REITs channel. I would really appreciate it. This book will literally, no kidding, will change your life forever. There are 7 lessons shared in that video from that book that you can definitely read. I highly recommend it. But of course, the video will save you a lot of time reading and then dissecting all of it. So, hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.